Foodwork is set to post its Q1 FY22 numbers, and obviously we are expecting a strong set of numbers. When you have a first look at it, it's a mind-blowing set of numbers, but let's not forget there's a very soft base last time as well, which is actually supporting most of the earnings. So let's quickly go through the earnings. Revenue is expected to come in at 887 crores versus 380 crores. So 133% growth we're expecting in terms of the revenue of the company on a year-on-year basis. While in terms of the profit, we are expecting the companies actually to report a profit this time versus a loss last year. The profit is expected to be at 60 crores versus a loss last year of 72.6 crores. Margins also strong expansion, 22.25% versus 6.4% on a year-on-year basis. Now, like I mentioned, soft base is something that is obviously supporting the earnings of most of the companies. But for Jubilant Foodwork, the month of April and May, they had highlighted specifically that April and May were nearly at 90% normal levels vis-a-vis the pre-COVID levels. So surely that shows that there are signs of recovery coming in there. But let's not forget, dine-in sales have been going through a tough time. There are a lot of restrictions this time around, even during the second wave, for dine-in, going outside and eating. Different states have different restrictions, different operating hours. So dine-in sales are expected to be low even this time around. But what will be driving the recovery for Jubilant Foodworks is going to be the delivery and takeaways, and that is online channels is something that is driving the delivery, the performance of most QSR space as well. So deliveries is something that we'll be watching out for. How has the growth been in deliveries, comparing sequentially as well. Now, when you talk about the raw material cost and margins, higher raw material costs, this time around even the milk prices had risen. So higher raw material cost is something that will be impacting the gross margins of the company when you compare it sequentially. But all in all, some impact coming in on the gross margins due to those RM costs. But otherwise, the cost efficiency programs, operating leverages mainly are to drive the margin expansion for Jubilant Foodwork on a year-on-year basis. Year-on-year basis, it's a very strong number. What, we could even see a slight bit of difference could be on a quarter-on-quarter basis, mainly due to the increase in raw material prices in terms of the margins of the company. Now, obviously, we should be watching out for commentaries in terms of how is the growth in the online ordering, and how far is the company from pre-COVID levels. Are we back to pre-COVID levels now? Because in April and May, nearly they were at 90% of normalcy. Though, we had seen an impact coming in because of the lockdown. How was that second wave impact on the company? Something that we should watch out for. Demand for deliveries, takeaway orderings, how is that panning out? What is the company looking at? Any more new ventures? Are they looking at buying any more new acquisitions? Any new food segments that they'll be looking at as well as something that we should surely watch out from Jubilant Foodwork, as well as store addition plans. Are they back on track? What is the FY22 plan for store additions is something we'll be watching out for. And, forward-looking commentary, anything coming in from the management is something you should watch out for as well.